25th of November, Friday, and I want to show you a few charts and give you my reason. I think the top is in. I mean, we've had unprecedented moves in the market here since the election. I don't know if it would have happened if it was Hillary, but it's Trump, and this is what happened. And if you look at this, we've had, and I'm just pulling some stuff off of Twitter because I agree with it. It's better than charts that I can bring up. Is that the 10-year Treasury yield is up 33% in 3 weeks, and the 10 years where a lot of loan prices are set at, and this has incredible consequences for the economy. This is where mortgages are set. This is where credit cards are set. This is where adjustables are set. And I saw another chart this morning is we have now the highest borrowing costs we've had in decades in the the loan market for businesses, and that will impact people's ability to buy things and impact ability for companies' bottom lines. And I just wanted to show you this here. This is not sustainable unless the Fed is suicidal or everybody is going into a depression, because there's no way they can stop this. So I'm looking for reversals here. And let me just show you another chart from this same guy. This is incredible stuff. Look at the yen. This is 9% move in 3 weeks. It's in their history since they started the FXY. I mean, this is 10 years. This is just crazy. And so, once again, I mean, if the Japanese lose control of their currency, I mean, this country imports a lot of things, and our interest rates are going up, and their acquisition costs of materials are going up, and our ability to buy their stuff is going to go down. And so I don't know how this ends well. These moves are just extremely exaggerated, and gold's been following the yen. So I'm looking for the yen, and I'll show you another chart here in 1 second. Is right here. This is gold and yen both hit their 61% retracements. So the other big move here is, will gold go and just basically give up the whole year's worth of gains? A lot of people are here seeing this as a head and shoulder pattern. It very well may be, but I'm looking for a bounce first before they pull this thing down if they do. And there's precedence here. This was not a clean head and shoulder up. I don't think this is going to be a clean head and shoulder down. But if they push this down to 100, I mean, they're talking about taking the yen down, another 8 to 10%. And I just think it'll just cause things to be blowing up all over the place, because that means our 10 year is going to be over 3%, and that'll just kill the real estate market in this country. And banks hold real estate; that's their biggest holding. So I just think that the Fed's going to have to intervene here at some point. And just look at this. This is another chart. I love these correlation charts. Just look at this. Things correlate, and these things, the correlations are just out of whack. And so, either 30-year yield relents, which is then gonna, because of the yen's relenting and because gold will start going up, or the futures are going to come back down. And I think it's going to be the latter. This is just for today. I mean, just show this is, but I haven't shown it for the last 3 weeks too. The correlation has busted. And this is my favorite one of all. This guy in StockTwits, I love his stuff. We're usually in pretty good agreement, and he has a great chart here. And I think he explains it pretty well. Basically, every time the stock market moves into the red zone, pops up out of the red zone, this is RSI area, you get a pretty good correction. And we're there again. And then he has another chart that I didn't show you, but this is a massive rising wedge, and the resolution is back down here in the 1850s area. So, I mean, there's some precedent here that we unwind just like we did the last 2 years at the end of the year. These are hedge funds probably trying to make their number, and they're going to say mission accomplished, and then it's going to roll this thing over hard. And so it'll be interesting to see if the Fed, is going to raise rates and flatten this yield curve out, which would probably be ending up being a disaster. So they may do one because they said they have to, and I think they're done. I mean, market's pricing in like 4 of them right now, which is absolutely crazy. It's going to take Trump a year minimum to get any kind of spending going, and the stock market is up. The stock market is up, I think, 12%. Let's take a look here. I mean, look at this. It's up from 208 to 221 in 3 weeks, which is just incredible. And we don't see the overnight push down too. So we're up like 12% from the sell-off to today's close. And the market traditionally goes up 11% a year. And we have Goldman Sachs reducing GDP growth estimates. And we've had a GDP growing less than 2% a year. And so I think we basically have factored in a whole year's worth of gains in 3 weeks. And so I'm saying, hey, this is it, and we're gonna sell off. And I think they use today as a way to reach. And then the other thing too, you saw oil. I mean, oil just took it on the chin today, and that's what I'm expecting to see for everything else. It's another rollover, and pushed up to the top of the VWAP band, selling right back down to VWAP, but there's no there. And I'm looking right now at the oil futures chart, looking at a year, and I've talked about this before. You have 6 months oil should be $5 higher for those that are just rolling it, contango. And then if people are storing it offshore, they look out a year and they're trying to make sure they have a $10 change in oil. But oil is at in January 2018 is at 51.19, and for the January contract right now it's 45.96. They're losing money. The shipping costs are going to eat them up, and I think the shippers are raising rates as soon as their contracts are up. And so I think it's going to be a losing bet for those who are storing oil offshore. I think it was all this big game here to try to get to this OPEC meeting. And then you look out to the June contract, we're at 49.53. We're probably a buck high on oil right now, short term. And if they don't get their act together, I think they're gonna collapse. The front end's gonna collapse because this is the season of not buying oil, and we're going into a December contract. And everybody long oil either needs to take possession of the oil. There's no place to stick it, or they need to roll the contract into the next month. And so, I think it's going to be problematic for them. And so, we're gonna see some pretty interesting moves here in the next couple weeks. My view is I think oil goes under 40 because there's just not enough buyers, and there are a lot of people producing. And so we have a little game theory going right now. They could say whatever they want, but there's no place to stick the oil they're pumping out of the ground. So either they're going to be forced to stop producing, or they're going to cut rates so they can keep producing. And I think they're going to cut price to do it. Anyways, Bob from Trade Genius. I'll have some more videos this weekend. I'm just grinding this thing out. I'm long gold now. I'm short biotech. I'm short real estate through a diagonal, and I'm long miners now. Natural gas I hopped off, missed a little bit of a trade today, but that's going to be the trade going into next year. And I'm long grains, and I think that's the trade going into next year too. So anyway, I'll catch you guys over the weekend. Have a good one. Thanks. Bye.